The banking crisis that's rocked markets for the past 2 weeks. It started in America, but the biggest risk, it turned out, was in Switzerland, one of the world's oldest and most important banks, Credit Suisse.
On Friday, the liquidity outflows and market volatility showed that it was no longer possible to restore the necessary confidence and that a swift and stabilizing solution was absolutely necessary. And this solution is the takeover of Credit Suisse by UBS.
UBS, Credit Suisse's longtime global rival, both born in the 1850s.
Let me be very specific on this. UBS intends to downsize Credit Suisse's investment banking business and align it with our conservative risk culture. It is intended that the combined investment banking businesses will over time account for no more than 25% of the group's risk-weighted assets.
There won't be any impact on me, but what a waste. Really, a waste.
Now we'll only have a single bank, UBS, and that is not good. It's good to have competition, and we won't have that anymore.
But the drastic action, including a $100 billion line of credit for UBS, was essential to keep confidence in the global banking system.
We felt that there was a serious risk of contagion that could have brought down and triggered runs on many banks, and that's something, given that our judgment is that the banking system overall is safe and sound, depositors should have confidence in the system, and we took these actions.
So I'm not, minimizing, but I'm also saying that we have a strong banking sector, much stronger than it was during the last great financial crisis.
Our banking system is sound and resilient with strong capital and liquidity.
Now, those efforts to shore up the banking system were vital, so the effort to rein in inflation was not diverted. If these banks had failed, then interest rates would have needed to have been cut. Inflation, with all its damaging effects, could have remained for years. So by shoring up the banks, the job at hand to defeat inflation could be continued. The European Central Bank raised rates this week by 0.5%.
Inflation is projected to remain too high for too long.
The Federal Reserve up by 0.25%.
As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate.
And the same for the Bank of England.
Well, we don't know whether it's going to be the peak. What I can tell you is that we've seen signs of inflation really peaking now, but of course it's far too high. Now, we think it's going to come down sharply, really from the early summer onwards, but we haven't seen that happen yet.
So, fight inflation or save the banks. For this week at least, the world's major central bankers managed to do both.